Hello traders and welcome to another video review. Today is Wednesday, August 5th, 2026. Let's take a look at the economic calendar for today. What do we have here? ADP non-farm employment change scheduled for release at 2:15 from the USA. S&P Global Services PMI data scheduled for release at 3:45, and at 4 o'clock non-manufacturing PMI data are scheduled for release. 30 minutes later, crude oil inventories are scheduled for release, and at the end of the day, we got a speech from the US President Donald Trump. So as you can see, all of this data are from the USA, and those data might have a high impact on the market behavior. So without any further ado, let's switch to the charts, and we start with euro dollar. Euro dollar for our time frame chart is showing us a breakout higher after the test of the upper channel line has been done. 1.15 is the major technical support right now in the short term, and we are right now testing yet again the upper channel line, descending channel line, which is now color kind of a dark yellow, beige, something like this. Local technical resistance 1.1559. Maybe we'll get there, maybe not. It looks like with this kind of the momentum of 65 points, we still have the possibility to move higher without any problem. So bullish situation for the euro dollar until the technical support is done. The same situation is on the British pound. We retrace a little bit to the upside. The local high 1.3468, momentum 60 points, still strong momentum, but the volatility is not that much. Technical resistance 1.3505 and the local high from the Monday. So at least this situation on the cable is a little bit more clear. The reason for that is if we place the impulse wave situation here on the chart, we might have something like this here, possibly 5 waves to the upside. Now ABC to the downside, kind of a correction towards 1.3401, 1.3383, and then the market might be ready to move higher. Otherwise, this impulsive development is invalidated. US dollar versus the Japanese yen. After the nice bounce to the upside, let's take a look how much did we actually bounce. From the extreme lows to the extreme high, we bounced 1.76%. Right now we are trading just below the technical resistance and the supply zone with the negative momentum, so the outlook remains bearish. However, as we can see from the past, even after this kind of interventions over the next month, and maybe 2 months to be honest, from the extreme low to the extreme high, bulls managed to move higher. So those interventions of the Bank of Japan are the emergency interventions. Still the upside is possible. Gold market breaking higher. We just took off the local trend line resistance, the yellow one, or the gold one. Gold is breaking above the gold technical trend line, and we are testing the swing high from the July 22nd with 4,165. Any breakout higher opens the road towards the major short-term technical resistance 4,222. Nevertheless, we hit the extremely overbought conditions, so we might see some sort of the profit taking, we might see some sort of the pullback before the bulls will attack yet again. Nevertheless, this is still inside of this big range between 3,943 and to 4,223.25. So that's still the situation when the market is trading inside of the range despite the recent movement up. S&P 500 new all-time highs, breaks towards 7,773. Extremely overbought market conditions on 4-hour time frame chart. On a daily, the situation should be almost the same. There you go, 1, 2, 3, 4, 5 days. It looks like the 4 days are up. Now today is another day when we can see the up day. Maybe very important to take a look at this. We broke above this supply zone. So now these levels here are still the technical support yet again. New swing high, new all-time high. Nevertheless, please be careful with profit taking and some sort of the test of the breakout towards 7,700. 7,620. Right now 7,765 is the current level of the S&P 500. Well, the next target 8,000. And the crude oil keeps moving lower. They didn't even fill the gap. Just like a partial cover is here, a little bit lower. There you go, something like that. Then you got this retail gap here, partial cover, even less. Still the market keeps moving lower, keeps moving down. 80.55 is now technical resistance. 76.25 is now technical resistance. There is still some room to the downside to hit the extremely oversold conditions. One more gap left to be filled is still between 71.41 and 72.50. So right now the situation is way more bearish than it was. And last but not least, the Bitcoin breaks above the trend line. If we move our trend line towards the newest data, like here, you can see that we got the test of the trend line. If we take this into the account, this swing high at 65,397. So that's the pure technical movement to the upside from the nice technical support. It looks like we are going to be rejected just as we were here, just as we were here, just as we were here. So the situation here is in the very, very short term. Since the local high at 66,961, we have low, lower high, lower low, lower high, lower lows, lower high. Definition of the local down trend or the descending channel forming on the Bitcoin. Just remember that the swing high was made on July 21st, so it's more than right now 2 weeks since we got this situation on the Bitcoin, but it still looks like the bulls are not able to move higher on the Bitcoin, which is why this is purely technical trading. As you can see, market respects the levels, respects the trend line for now at least. So no global macro, no fundamental trading conditions are affecting the Bitcoin right now. We have a pure technical trading these days, and it looks quite alright in this market conditions. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.